It's really sad the way people are acting around this whole crisis. I mean, we're in a banking crisis, and it's not getting as much attention as the global financial crisis. And yet I'll argue this is worse.
In today's update, Mark Yusko sheds light on the current banking crisis, articulating why he believes the government cannot be relied upon to safeguard people's money. Yusko contends that the fractional reserve banking system, a foundational element of the financial system, is gradually deteriorating. He has long held the belief that Bitcoin is poised to emerge as a dependable alternative asset, capable of weathering economic shocks and providing a safe haven for investors. Yusko goes on to suggest a sinister plan at play, aiming to channel deposits into the largest institutions under government control. The ultimate goal, according to him, is the introduction of a central bank digital currency. This proposed move raises concerns about the potential implications for financial privacy and control over one's assets. In the latest interview, Mark Yusko delves into what we can anticipate in terms of Bitcoin, the broader crypto market, and the unfolding banking crisis in 2023. The discussion promises insights into the intersection of traditional banking, cryptocurrency, and the evolving financial landscape, exploring the potential impact on investors and the role of Bitcoin as a resilient alternative during times of economic uncertainty.
By chipping away at the foundation of that, by eroding the confidence in the confidence game. It's, that's a con game. That's a con. No, confidence. It's about confidence and making capital work. Without financial institutions, capital sits idle in mattresses and countries implode. Look at Greece, okay? When they took all the money out of the banks and they put it in the mattresses, what happened to the Greek economy? It got bought by China. This is the plan. This is the plan. And it is sinister, and it is happening right in front of our eyes. And what's going to happen on Sunday, right? Savior Sunday. So Sinister Saturday, Savior Sunday. My guess, First Republic becomes part of JP Morgan this weekend. You heard it here first. And here's why. If your plan, right, is to erode the confidence in the banking system and lead deposits to funnel up into the largest institutions, which you control at the government level. And there's a great story coming out now about how Mr. Diamond got put in charge of the largest, most powerful bank in the world, and the families that he owes in terms of helping him with that. Kind of crazy stuff. But all that said, if then the next step, the end game, is you don't need any of that, good citizens of America. We, the government, are here to help. And we are going to eliminate all of your fears with this beautiful, lovely CBDC. You just put your money in the Fed and we will take care of it. You'll never have to worry about it again. Are you kidding me? Are you absolutely kidding me? People are going to fall for this? Look, when you get in trouble, like right now, First Republic Bank needs friends. They're under attack. Pack of jackals, short sellers are after them. I mean, everybody, it's the evil short sellers' fault. No. It's not the evil short sellers' fault. They're just benefiting from the price decline. They're not causing the problem. The problem is caused by this asset liability problem. But at the end of the day, there are people who could solve this problem. However, those people have a different agenda. And I'm telling you, JP Morgan, change the letters, FRC, JPM. Well, and here's the crazy thing, right? So just goes to show where we are in the manipulation cycle of equity markets. They grew 3%, 3, but it wasn't down. And everybody was expecting it to be down again because it had been down multiple quarters in a row. Revenue grew 3%, not 33%, not 103%, 3%. 3% growers don't get 30, 40 multiples, but they are. in this market. I mean, Netflix was like 1.7%. I mean, people are like, oh, that's so awesome. Like, on what planet is 1.7% awesome? It's not awesome. And same thing with Microsoft went up 8 and something percent. I mean, this is on a $2+ trillion company. And I mean, I haven't done the actual calculation, but my guess is that move was bigger than 480 of the S&P 500 companies, or 460 or I don't know what the number is, but some crazy number, just that single move. So the mania around something that isn't negative, like GDP number came out, 1%. Oh, but at least it wasn't, down. Okay, but year over year, still 1%. Again, like fourth quarter, 0.9% year over year. That's a recession. It just is.
Yeah.
Now, it's not a bad recession. It's not like a face melting recession. It's a 2001 kind of yuck kind of recession. But in those periods, people just try to look for the positives. And I'm like, okay, it's positive, but now Q2, I think Morgan Stanley came out the first one and said it's going to be slightly negative. That would be ugly, and then they'd have to declare a recession, even though they haven't yet. But earnings are less bad, so that's good. And growth was less bad than we thought, so that's good. I don't know. I just, my experience is long term, that's not a good thing. Short term, it can be a good thing if you're a speculator or trader, but long term, the numbers eventually catch up.
Yusko holds a dissenting viewpoint against the assertion that fractional reserve banking is fraudulent. Contrary to this stance, he emphasizes the pivotal role this banking system plays in pooling risk and fostering wealth and innovation. According to Yusko, fractional reserve banking is instrumental in funding businesses and facilitating asset ownership, contributing significantly to economic development. In his discourse, Yusko draws attention to the historical perception of gold as money, primarily because it represents an asset not tethered to any liability. However, he presents the perspective that Bitcoin could emerge as the new form of money. The rationale behind this lies in the fact that, like gold, Bitcoin is not tied to any underlying asset or liability. This argument gains relevance particularly in the aftermath of the U.S. government's substantial money printing in 2020, resulting in currency devaluation. While acknowledging allegations of J.P. Morgan manipulating gold prices, Yusko highlights the contrasting trajectory of Bitcoin. He points out that Bitcoin's value is on the rise, driven by its limited supply and global demand. In light of these dynamics, Yusko provides a thought-provoking analysis in the latest interview, offering insights into the volatile banking industry's future and Bitcoin's trajectory in the weeks to come. What are your thoughts on Yusko's predictions and his perspective on the evolving landscape of both the banking sector and Bitcoin?